Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from The Wealthy Homeowner, Canada's authority on home ownership. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, coast-to-coast real estate boards are releasing their April sales stats, and you can pretty well count them on one hand. What do you think that it means, this huge drop, and how big was it?
What do I think it means? What I think it means is that what we've been saying on this show since you first invited me on a couple of years ago. All housing markets function exactly the same way. Real estate is not local. That is a myth. Everything that you read about housing markets is a myth. You read sales stats that were created under a seller beneficial legal representation infrastructure in Canada. There have been no new stats released since buyers first were able to have their own representation in Canada, well, North America for that matter. Your listeners should take a look across all the different real estate boards from coast to coast. And for the most part, they're going to see the same pattern appear everywhere. To see the real pattern, they would have to do a more granular view of that MLS system's data. They would have to adjust it for the MLS sales reporting rules, geographical changes made to the reporting areas, practices within the local real estate brokerage's office. But for the vast majority of real estate boards, the commonality of what is being reported today pretty much debunks the old real estate is local myth that real estate agents have sold you for the last 50 years. What do I mean by that? What I mean is this. Across Canada, coast to coast, no matter the city, no matter the MLS system, no matter how that local real estate market was progressing before the lockdown, adjusting for when the lockdowns took place in your home province, you are going to see the percentage of sales drop being virtually identical from coast to coast. You are seeing real estate markets from coast to coast functioning in totally different ways when the lockdown was given in their province. And the resulting year-over-year comparisons are now coming in around 60 to 63% decline in sales. How is that possible? How is it possible that Calgary, a housing market that has been correcting since 2013, saw a 63% drop in sales? The Greater Toronto area, a 63% drop in sales. The Greater Hamilton area, a drop of 63% sales. The Greater Niagara area, a drop of 63% sales. The Greater Vancouver area, when you adjust for the categories of homes that are in the sales mix in the month of April, it's a 62% drop in sales. The only real estate board we don't know across this country that has been released is Quebec. Quebec's the only one. Every other real estate board, when you adjust for the day their province closed the doors, we went into lockdown, are reporting between a 60 and a 65% year-over-year decrease in sales, percentage decrease in sales. How is this possible? How can this percentage change be virtually identical from coast to coast? And the answer is quite simple. Unlike what you've been told for the last 50 years, that all real estate markets are different, real estate is local, they're not. All real estate markets in Canada and in your province function exactly the same way. They function in such a similar manner that we have never had an opportunity, ever, in the history of real estate stats, to see a housing market shut down and then the consequences of that shutdown roll out across the marketplace. We are seeing that for the very first time in history. You have never had an opportunity for the layperson, the consumer, someone untrained in housing markets, which is virtually the entire population, because there's not an economist or housing analyst in Canada today who's trained in housing markets. Those guys have all retired, and like my dad, and they're sitting enjoying the relaxing retirement right now. Everything that you heard is being debunked in real time. Calgary and Toronto, two markets functioning totally differently. One claimed by the real estate boards to be accelerating for the last year. Calgary claimed to be a negative in year-over-year comparison. Yet today, magically, they're both announcing around a 62 to 63% decline. Vancouver, the Greater Real Estate Board of Greater Vancouver. What I think they've got about a 40% year-over-year claim to make. Oh, yeah, 40% year-over-year. You've got to do in Vancouver because the MLS rules are different there than they are in other MLS systems. No two MLS systems have the same rules and regulations anywhere in Canada. That means 69 different sets of rules and regulations, which impact reporting days, the practices of the real estate brokerages and how they report and what they report and when they report and what's counted and what's not counted. All of those crazy differences, coast to coast, are correlating in a 60 to 65% drop in sales coast to coast. How is that possible? How is that possible? Well, it's possible because of this. Sales, or the multiplicity of sales, as we've described on the show in the past, is the same no matter where you go across the country. The factor in the multiplicity is the only thing that changes. That factor is dependent on several different factors, and it does change. Well, it changes cyclically, by the way. But that multiplicity of sales magically has been wiped out by the national lockdown. You have a dead housing market coast to coast, no matter the condition of the market prior to the lockdown. With a simple adjustment in the difference between when a lockdown was made in each province, the precision of these percentage drops is so close to one another across this country. Even someone untrained in housing market analysis should be able to say, this is too much of a coincidence to be a coincidence. And that's because it is. That's because this is how housing markets function. You are going to see over the next 60 days a whole series of things you've been told to believe over the last 50 years are going to be proven to be false. All of those shills and hucksters who have been out there for years on television, doing newscasts, blogging, website, anything where the name realtor and sales are in the same location, they're all going to be debunked. Look at the sales to new listings ratios across Canada. How is it possible in the Greater Toronto area they're posting a 60% sales to new listings ratio, but housing prices supposedly are exactly the same this year as last year? They went unchanged. When the last time the sales to new listings was 60%, they were saying that was the reason why house prices had increased by 10% year over year. These charts, sales to new listing ratios, which are used by CMHC, Canadian bankers, every government of Canada, every economics team in Canada, ratings agencies, American investors, your local real estate boards, your local realtors, all of them, they all use these charts. You're watching in real time as the use of those charts is debunked. You're watching it debunked right now. Listings and sales are correlational. They are not, one does not cause the other. The ratio does not cause house price change. House price change does not cause listing count. Everything works in a cycle. It always has, and it always will. We have never had, my firm has never had an opportunity where we can just tell people outright, go look at the local real estate boards and you explain to me how Calgary had a 63% drop in sales and Toronto had a 63% drop in sales. Tell me how that is possible if real estate was truly local. Real estate is local, more or less province-wide, but the trading cycles themselves are always the same. People ask, well, Ross, Vancouver, they're only reporting a 40% drop. What are you saying? No. Go in and look at the data. Go in and with Vancouver, you need to look at both March and April. You look at the categories of homes that have sold in March, actually between February and March, and then you see the categories of homes that are selling now. Of course, Vancouver had to have a lesser year-over-year drop than Toronto because there were more people who had sold their trade-up homes in Vancouver, and they still needed to buy their next home versus Toronto. When you make that simple adjustment by looking at the data yourself, you have the same 62, 63% drop. The truth of the matter is, this housing correction, this housing downturn, this lockdown is such an empowering opportunity for Canadians to learn how to make rational decisions with their home ownership choice. It has never happened before when it like it is right now. We have never had a market that was locked down. Not floods, not wars, not recessions, not depressions, not massive layoffs, not a price of a resource dropping to zero. None of those things are the same as a locked down market. You're still going to see some sales take place because there's still going to be that little worm in the sales arena who squirms her way up to get some first-time buyer to buy a house. We saw one today where some realtor was bragging about double-ending a property where it was a first-time buyer. So that means they represented both the buyer and the seller, convinced the buyer to pay a price that the house was valued at back in 2017. But clearly the buyer wasn't told that type of home they were buying was selling for 28% more back in 2017. Why the heck are you paying a peak price in April of 2020 when that same house should have cost 28%, cost 28% more 3 years ago? You should be getting that 28% lowered price. I know it's opposite on the way down, but it never happened. It was being bragged about in social media today. I'm watching social media realtors right now posting chart after chart after chart, weekly sales, bi-weekly sales, trying to justify how their real estate board, what their real estate board released in the last 2 days for April sales data. They're coming out with all of these answers that are gobbledygook. They're answers that would not have even supported an explanation 2 months ago. So if they wouldn't have supported an explanation 2 months ago, they obviously are not supporting your explanation today. If you don't have a set of metrics, if you can't speak the story, if you can't explain things in a manner that worked 2 months ago or a year ago and still works today, you're just selling a bill of goods. Coast to coast in Canada today, you can go, all of your listeners can go to the Calgary Real Estate Board and you can see where they said their sales dropped 63%. You can go to the Toronto Real Estate Board and see where they said their sales dropped 63%. You can go to the Realtors Association of Hamilton and Burlington, where they said their sales dropped 63%. The Niagara Association of Realtors. Quebec, when they come out, if you look at a granular view of their data, because again you're going to have to be careful. To see that 63% drop is probably going to take another month, because they had a whole bunch of condo sales that took place in February and March that will have trade-up sales resulting from them in April and even early May, which that ratio is different there than it is in other parts of the country. But that's only because those markets were functioning at a different point in their cycle when the lockdown occurred. When you remove the difference between where a local housing market was in its trading cycle, and you simply adjust for when the province went into a lockdown, every single real estate MLS system in Canada has dropped virtually identically. There is no difference. Everything that you've heard about real estate being local is hogwash. Everything that you've heard academics pontificating about in the news for the last 3 years is false. It is a fraud. Because if what they were saying was true, you wouldn't see this consistency across the marketplace. This will also happen as we roll out of this lockdown. You are going to see a whole series of inaccuracies and bad forecasts result, because they have no understanding of how a simple housing market functions.
We'll have more with Ross Kay right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Ross Kay. Ross, studies are suggesting Canadians will spend less once we get out of this lockdown. In the past, you've warned on the show the consequence of lower spending and why we should hope for it. Any new thoughts on that?
Yeah, I guess my new thoughts are is that the research behind those comments we've made in the show about the worst thing that the Canadian economy would see happen was a slowdown in the housing market are the same today as when we made them, a year, 2 years ago on the show. What my concern is that the Canadian public is not going to be educated by our political leaders, our academics, our economists into the consequence of what happens when consumers spend less. The wealth effect, which drives the Canadian economy, always has, always will, until we move past a household consumption-based economy. Which I don't know if there's a way that your country moves beyond that for any length of period of time. It's sort of like relying on Alberta's oil reserves to power our economy or our GDP. It's kind of foolish. Those are the surplus profits you should be taking in an economy. It isn't something you should be relying on for next year's GDP or wealth growth. The wealth effect that happens through rising house prices means that Canadians themselves are able to create more money. We've often heard about, where does money come from? Well, the bank just makes it up. The Canadian government just prints more money. No, that's false. The way that we look at it, we believe that every dollar created in Canada is generated from the housing market. We believe that every dollar that is added to the money supply comes from the Canadian housing market. That said, let's say that we're wrong. Let's say that that's not true. Let's say that our data doesn't support that, which it does, but let's just say it doesn't. What happens when people stop spending is it's a downward spiral. And you don't really, I don't know if you have an opportunity to learn this, Jim, unless you've gone through a major housing correction. And if you've watched the consequences of that housing correction, which I was unfortunate enough or lucky enough to go through in the early 1990s. You watch when a house drops in value and the owner of the home no longer has the net wealth they had when that property was valued at a higher price. They initially cut back on their spending because they're not able to leverage at all any longer. They're basically in a deleveraging phase of their own personal finances, and they quit spending. Well, as they quit spending, we'll just use this simple example. Let's just use the house. Let's say that their roof really needs to be replaced. Well, their home is no longer worth what it was worth a month ago. Let's, just for the sake of the argument, say it's now worth 10% less. They no longer can go to the bank and get a line of credit to get that roof repaired. They're going to have to put those plans off. That means that $7,000 roofing job that your local roofer was counting on, which again this is a cyclical pattern that these type of supplies service providers go through, is no longer there. He has to lay off or she has to lay off an employee. That employee then no longer has money to spend in the economy themselves. So the guy that was working on their car, they can't afford to pay for oil changes anymore. So that guy now goes to the local Canadian Tire, buys the oil, and changes the oil in his car himself, cutting out the guy who was working at the local oil change shop. The guy at the local oil change shop now has less customers coming in, so he has to lay off some of his staff. When he lays off that staff, those people no longer have money to go spend at the pizza shop once a week. They instead now make pizza at home. They buy their own pizza making kit. They buy the pre-made crust and they slap some tomato sauce on and some pepperoni, and there you go, a little bit of cheese. The guy at the pizza shop no longer has the amount of pizzas being ordered, so he cuts back. It's a spiraling down effect. So what you see, what the wealth effect is, how it builds an economy as the wealth effect improves the wealth of a nation, it also brings down an economy as it's spiraling down. Now, if Canadians had been told this, let's say for the last 30 years, if kids were taught this in school since the day they entered kindergarten till the day they graduated their last year of school, if this was just a common way of talking, we would better understand decisions in the upswing of the wealth cycle so that we would have reserves available for the downswing of the wealth cycle. We may actually decrease the magnitude of swings in the wealth cycle if we were given the education to understand how it works. We certainly would not have allowed our minds to be convinced that housing prices in some parts of the country supposedly magically increased 30 and 40% year over year, which they never did. But we believed that they did. The banks believed that they did. It allowed us to leverage our home equity wealth, our home equity into spendable income or spendable cash. All of those things would be removed. As we have said on this show up to 2 years ago, the worst thing that a population needs to have, a country needs to have, is a downward trend in house prices. The best thing that a country could have would be a 20-year period of a housing stock inflation-adjusted annual increase in the value of their home.
But yet here, Ross, in British Columbia, we have a government that has speculation taxes on empty homes, foreign buyer taxes, taxes on recreational property. They're doing everything they can from making, they say this is to make housing more affordable, but in essence bring the prices down. So they are sabotaging the economy. Is that the premise?
You know, Jim, I really appreciate what you just said, because I didn't view it from the way that you just asked that question. You may have just asked one of the most important questions I have been asked in the last 6 years. You have just, with such a level of conciseness, explained the situation. Your government in Vancouver and across the country, they have brought in a series of policies just over the last 4 years, policies that did not exist for the entire history of the country up until 4 years ago. They brought in policies to do what? To cool off house price gains. Nothing more. They wanted to cool down those house price gains. That meant they believed that these house price gains were real. They believed when the real estate board told them housing prices are going up 30% year over year. They believed them. The voters believed them. The voters believed them to such a degree that the politician feared not being reelected. So they brought in policies that they thought would curb this, when in fact no policies were needed. Now, I will exclude allowing non-Canadians to own Canadian real estate. I have always been and will always say, I've said it for 30 years, non-Canadians should not be allowed to own Canadian real estate. That is the only rule that a housing market needs. That, and for sales stats to be debunked. Because Canadians are super intelligent people. Canadians are by nature a frugal people. I don't care what I read in the newspapers about how spendthrift Canadians are. They are not. My experience dealing with thousands of families has not proven that to be the case once. Canadians are just rational people. Tell them the truth and they will make rational decisions. The policies that you just brought up, Jim, were all designed for one purpose, to cool house price gains. House price gains that weren't actually happening. House price gains that were a consequence of house price illusion in a new communication world where social media allowed the instantaneous communication of thought, opinions, beliefs. Those culminated in the acceptance, housing prices were increasing 30%. No, they weren't. We have had a reward, Jim, out since 2013. So what 6 years? Over 6 years now. A reward has been out since 2013 for anyone to prove that a house increases in value in 90 days. You must prove with data, which simply means MLS sales, if that's what you want to use, that you can prove a house increased in value 1 penny in 90 days. There are 150,000 real estate agents in Canada today who all have had access to that reward. Any of them could have claimed it. Initially, it was $1,000, back in 2013. This is when, I'm not going to get into why the reward was first offered, but it was first offered way back when it was $1,000. It was never claimed. It has been 6 years, and no one can prove house prices change in 90 days. You would think with 150,000 real estate agents in Canada, 69 real estate boards with their staffs, their marketing directors, their economists, their housing analysts, all working on staff, the legal staff of all of these real estate boards, including Canadian Real Estate. You would think Greg Klump, the chief economist for the Canadian Real Estate Association since 1992, would have been able to claim that prize in order to simply debunk the premise. He couldn't. House prices do not change in 90 days. But your politicians believe that they did. If they believed it, your politicians, why wouldn't they have claimed the reward? Why wouldn't they have come forward with the data to prove it? No. Instead, they bring in rules designed to eat away at house price gains when those rules weren't needed. All you needed to do was to tell the public, hey guys, housing prices really don't go up in 90 days. Nobody in Canada can prove that they can. They haven't been able to prove it since 2013. And Prior to that, in the 1980s and 90s, nobody selling real estate believed that they did. That's what you just, perfectly wrapped up in that question, Jim. You perfectly wrapped it up. And, I'm thinking about it, obviously, as I'm answering your question, because I'm thinking about all of those crazy things your politicians in Vancouver talked about. All of those crazy thoughts that all the academics put forward in Vancouver, the UBC staff, the Simon Fraser staff, they always had these great solutions. When in fact, what they were really doing was they wanted to stop house price illusion. They just didn't realize that that's what they were doing. Because any of these academics, I don't think any professor makes, a ton of money. They could have claimed the prize. They still can. It's out there available to everyone. If you can prove any single street in Canada in history that a house increases in value in 90 days, you win the prize. Your question, Jim, just summarized why we can make that reward, that reward, because we know we'll never have to pay it. We know you cannot supply us with the data that proves house prices change in 90 days. It doesn't exist. Yet every single political leader in your province believed it. They believed so validly that they brought in policies by the dozen to try to curb it. In the claim that they were going to improve affordability. Well, it's 2020. Housing prices have dropped dramatically in Vancouver over the last couple of years. Has affordability improved for anyone out there? Is anybody now buying houses that couldn't buy them before? Probably not, because that story is going to take a little longer before it becomes true.
We'll have more with Ross Kay right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, many listeners are asking for your thoughts on house prices the next couple of months, next year, and even well into the future. Well, what kind of outlook do we have?
What do we have? Okay, so if you go back to our earlier session, we talked about how all the housing markets are dropping around 60 to 65% in sale. In that response, I also discussed that each local housing market was at a different stage in the trading cycle when the lockdowns occurred. That means in the ramp up, when the lockdown is removed, each of those markets will be moving into a different stage at a different time. What is really nice though about this lockdown is, for the most part, when you adjust for the activity levels that are taking place in each different locale across Canada, those markets are all going to spool up in following the same pattern. So when they spool up, that inevitably means house prices will be reported as dropping early in the first stage of a trading cycle. Your listeners need to also understand that you're going to hear different story coming out of Vancouver than Toronto, because where they were in their trading cycle when the lockdown happened, but also the composition of sales that were taking place in those periods of time are radically different. The two real estate boards report totally different things. You would have to use an aggregate of the Vancouver Real Estate Board, the Fraser Valley Real Estate Board, to come up with the Real Estate Board of Toronto is reporting. You would still then have you couldn't look at them exactly the same, because the Toronto Real Estate Board has 6 other real estate boards that are competing against it for market share in the Greater Toronto Area. In British Columbia, the MLS rules are different. The Vancouver Real Estate Board covers its own jurisdiction. Fraser Valley covers its jurisdiction, and those two boards don't overlap. The sales reps can overlap, but those two boards do not overlap in the reporting of MLS stats. In the Greater Toronto area, there's a huge level of misreporting, and reporting between those 6 different boards for the GTA, and that reporting varies depending where you are in the cycle as well. So those two comparisons, you do have to adjust for those. So when we're asked questions like, what I expect for house prices, what I expect for house prices is not really relevant. What I expect for house prices in the category of home you're going to buy is more relevant. Because when we talk about the category of home that you're going to buy, how it comes out of the lockdown will be totally different than what other price categories of homes are going to come out at. We are also then going to have to judge during the first couple of months coming out of the lockdown how the consumers are going to interact with the housing market, because that will impact each category of house and their prices going forward. Those will all change. Will the government make changes to the home trading infrastructure in Canada to have it? I mean, today, CMHC just made here we go. We talked about this last week, Jim, and I'm talking about it again this week. This is a huge change that your listeners probably are not aware of. CMHC has been giving the Canadian government since the Trudeau government came to power. So this means the Conservative government did not get this benefit on their budget line item, on their budget, balancing their budget, where the Trudeau government has. CMHC has been paying huge dividends to the Trudeau government to help them balance the books. The Conservatives never got access to that money. That was an initiative brought in when Evan Siddell took over CMHC. Evan Siddell, a hire Bill Morneau. Siddell brought in this policy where they would have dividends being paid to the government instead of CMHC holding the money, or instead of CMHC lowering the cost of mortgage default insurance for the Canadian first-time home buyers. No. We're going to keep it high, and then at the same time, because we believe in fake house price gains, we're going to keep that insurance high to try to keep some young first-time buyers out of the market. Well, of course, the people who listen to the show, we know what the consequence of that really is. It's just the opposite of what Siddell thought would happen. House price illusion increased because he didn't reduce the cost, because he started to pay those dividends and held the cost of insurance so high, because first-time buyers' share of the market dropped, increasing the average selling price gains. House price illusion. Nothing to do with house prices. Just had something to do with how much house was being purchased in a given month. Today, he announces, hey, CMHC may not have enough money. Oh my gosh. After giving billions of dollars in dividends to the federal government to help them budget their budget without telling the Canadian public how much of the budget was being balanced because of that, now all of a sudden he says, oh, we may be short money. We did a stress test on our CMHC mortgage portfolio, and a worst-case scenario said this was going to happen. Well, maybe that worst case wasn't right. You know when he did this, Jim? He did it a short 2 weeks after we reported that CMHC was going to be insuring equity-negative home purchases in April, May, June, July, and August of this year as a start. Immediately, within 2 weeks of us going live with this, all of a sudden he comes out and says, oh, we may need more backing from the federal government. So that is a huge change that is going to take place, because that's going to impact the mindset of policymakers. That's going to impact the minds of Canadians, Canadian homebuyers. That's going to impact the minds of real estate investors, developers, builders. All of those things work together, and those things are all changing daily. So when I'm asked the question, Ross, can you just tell me what is going to happen with Canadian house price in a year from now? No, I can't. I can tell you today where it's going to be, but tomorrow Evan Siddell could say, hey, we got to raise mortgage insurance premiums, or we have to raise we are going to now subject our mortgage default loans approvals on a updated appraisal of a property. We are going to give the appraisers different instructions for first-time buyers than we gave those appraisers 2 months ago. The public doesn't understand that. The appraisers who go out and appraise the property's value get the instruction on the type of appraisal that's being looked for by the lender or CMHC. They do not have the freedom to simply give us a Canadian USPAP appraised value on the property, which is what a formal appraisal requires. The bank will say, don't get the appraisal as high as you can. We think these buyers have offered too much in this house. Make sure it's a tight appraisal. The appraisal will give a number. CMHC will say, look, we feel that houses are about 8% overpriced right now. Make sure that the appraisal you give us reflects that. Okay, totally different appraisal. CMHC could say, we need to raise mortgage default insurance because of the deflating housing market. Okay, that's going to cut out some first-time buyers from the market. Okay, that could be accelerating house price illusion, or it could slow the deflation of house price illusion. All of these things have to be taken into consideration. So, you got to take everything that we said in today's show in as a package. Housing markets are not local, trading cycles are. Housing markets are provincial, trading cycles are not. Trading cycles are local. You have to take as a forecast today will be irrelevant tomorrow if a single change to the home trading infrastructure happens. If interest rates, let me leave this with your listeners. If the Canadian banks decide to drop their 5-year posted rate to 4.79% from the 5.04% that it's currently averaging at, if they make that decision before Thursday of this week, the cutoff is Thursday, by the way. Wednesday, the end of Wednesday this week. That will change the home trading infrastructure. That will change every single forecast that we have. It will change it for the next month, the next 4 months, and the next year, because we know how that change impacts home buyers, which specifically first-time home buyers, and then subsequently all the trade-up sales that happen through the multiplicity of sales factors. So, I can't tell you here on the show live a house price change number, which I would be held to by organized real estate this guy wasn't right. Because all of the rest of this show that led up to me giving that number would never be talked about. We give people these prices unique to their situation every month. If we are wrong in those people will hold us to account. You cannot escape social media in 2020. If you can't hold up to what you're forecasting, you're going to be exposed as a fraud. That is the reality and the risk that you have forecasting in this marketplace, where people are paying you for the forecast. I will leave your listeners with this. Our institutional clients, our pro users over at Ross K Realty Consult, they have an idea of what's going to happen with all parts of the housing market and how it interacts with the economy. If the advice they were given last year wasn't correct this year, they wouldn't be renewing for the following year. Just keep tuning into House Street. If you're not working with us, simply turn into House Street, listen the best that you can, and all I would ask you to do is, now that sold sites are prolific across the country, when you hear some realtor tell you, or some economist, or some academic, or some politician tells you that house prices are changing, let them know that there's a reward if they can prove that to be true, because that reward sits there, remaining unclaimed.
Ross, thank you so much for chatting with us.
Hey, and thanks for having me back, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. We're also on Facebook, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.